Hi guys, and welcome back to the channel. If you're new here and you are interested in trading minimalist by keeping it simple, then definitely hit the subscribe button to see more videos like this one and support the channel as well. So today we are looking at the US dollar versus Canadian dollar on the 1 hour time frame. We are using three indicators: the breakout pivotal bars, the sentiment index, and the levels and zones. The breakout pivotal bars is the one that is assigning the color to the candles, so either green, red, or blue. I don't see an here there's one blue here. So the green candles are bullish candles, the red candles are usually bearish candles, and of course you should see a green candle on an upward movement, you should see a red candle during a downward movement, and blue candles are indecision candles, meaning that you should pay close attention to what's going on with the price action in that area, because they could either mean a trend reversal or a trend continuation. In this case, the price was going down in the first case, and then it moved back up. In this case again, the price was going down and it moved back up. So this is the first indicator. The second one is the sentiment index, which is giving us the indication of what the sentiment of the market is, whether it is bullish, so green, or bearish, so red, and its trend. So in this case you see that we have bearish sentiment as well as here and here, but it is progressively increasing, meaning that the bearish sentiment is decreasing, is fading away. But this is actually a good indicator, because a good indicator and a good indication, because as I'm about to explain, we probably are going to get another setup right here in this area in the coming candles. Why? Well, if you have a look at what's going on with this pair, we see that, well, we had an upward movement, but then a downward movement. So we are in a downtrend. We had the first impulse here, then we have a big consolidation here, and then we are having another impulse to the downside. So this is an impulsive movement, and within this impulsive movement we have small impulses, like one here and then a small retracement, another impulse here and a retracement, and we are in a consolidation, so we are probably going to get another impulse. So the consolidation looks like this, because you see the candles here which are allowing us to draw this trend line, and it's pretty much like this. Okay, and then also the bearish sentiment index, we can draw a trend line here which looks like this. So what does this mean is that the bearish sentiment index is getting compressed towards the zero line. So at a certain point here in the coming candles, so maybe today or maybe tomorrow, we can have two different situations. So either the price will drop down, so we have a breakdown here, and hopefully it's going to be on a red candle, so it's a valid breakdown, and at the same time the sentiment index drops down, so it breaks down, because right now it's getting compressed, so at a certain point it must break down. Or the other thing that it can do is to break up, so it moves to the upside and starts the bullish sentiment index starts improving. In this case, the price should move to the upside, and in this case I'm not interested in the trade. I'm definitely not interested. First of all, because it will mean there is a trend reversal, and when I use the breakout pivotal bars with the sentiment index and the levels and zones, I'm usually trading trend continuation. So I look for an impulse, a consolidation, and for another impulse. Moreover, in this particular case, we also have a resistance here. This resistance, which used to be a support and now is a resistance, is the one which is indicated by the levels and zones. So it's saying that we have a significant level here, which is a resistance, and if the price moves up here, it should also break this resistance, which is high unlikely. So what I'm looking for is to have a setup maybe today, maybe tomorrow, but in the next candles, and hopefully it's going to break down. Let's see what happens. Okay, so we just got our breakdown. The consolidation actually looks more like this because the price moved a little bit higher, and actually it's even nicer because it's a downward retracement. But the most important thing is that right now we have a breakdown. It's a valid breakdown because it's a red candle, so the Breakout Pivotal Bars says it's a valid breakdown. It's also a valid setup because we have a breakdown in the sentiment index, so we can definitely place our order. So let me draw this. Okay, so regarding the target, I'm taking the previous impulse and I'm projecting the impulse towards the downside. So let's see where we end up to. Okay, it's pretty far down. Okay, looks like this. And regarding the stop loss, I want to stay at least above the last candle, the candle that broke down. I want to be conservative and stay above the opening price and the highest price actually. So I'm a bit higher, and let me check. The risk reward is 2.2, so it's okay. I can take this trade, and I'll see what happens next. So I'm about 1 day into the trade, and there's really nothing much to say about this trade. It's all running smoothly. It's moving towards the target. It's probably maybe going to take some more time, but I don't see any issue with this trade. I mean, we still have the resistance wall up here. The price actually never retested our entry level, so we just entered the trade and never went back up into the stop loss level. It's just moving down. The candles are red. The sentiment index is okay, so I don't see any particular issue with this trade. Let's just wait some more and see if we reach the target. So it took just one more candle before reaching the target, actually just one more candle after my previous update. So we took the target here. We closed the trade with a almost 3x return, which is great. It means that we can lose the next 2 point something trades and we can still be profitable. And this is, guys, what happens when you have a setup, a set of tools, of indicators that you tested over time, that you build confidence in, and that you trade consistently. You just wait for the best opportunity. You focus on the best opportunities. It depends on your strategy, but maybe it means that you have just one opportunity per day. Maybe you have 5 opportunities per day, or maybe you have 1 opportunity per week, 1 or 2 opportunities per week. It doesn't matter. The most important thing is that we always maintain the focus on the best opportunities. Like this one, it was obvious that this was a trend continuation to the downside because we were in a downtrend. We were below a significant resistance. The sentiment index was confirming the fact that the downtrend could have its strength to move to the downside. So everything was confirming our analysis, and we traded and we finally got our return, which is more than 2, which is okay for me. It's not the highest, it's not the best, but it's still okay. And when you have this kind of return each and single day, you end up growing your trading account. It's not infrequent that the returns are more like 3-4x or even more, but at least when you have a 2x return, it's still a great return. Maybe according to your strategy, your overall trading approach, maybe a 1-to-1 risk-reward ratio is still okay. I don't know. For me, a 2x is acceptable. A less than 2x is a bit too risky, but this is the confidence and the kind of rules that I built myself over time. Maybe yours could be different, and it's totally okay. Every trader has his own rules. The most important thing is to focus on the best opportunities and always keep it simple, just like we do here. So I hope you guys enjoyed the video. If you did, make sure to leave it a like. Hit the subscribe button if you didn't already, and if you have any comment, feel free to write it down below. I'll see you guys in the next video.